Hi, good morning everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets, for Wednesday the 4th of June. The equity markets in the European trading session have started fairly mixed. Once again, seems to be a fairly consistent feature of these markets in the last few days, and that comes on the back of just a very slight decline on Wall Street. Nothing major, but certainly a bit of caution entering into the trading aspect of Wall Street, and that followed into Asia. Fairly mixed trading there. Very slight gains on the Nikkei as the Japanese yen continues to weaken against the dollar. That has helped equities in Japan climb overnight. Very slight gains though. Also overnight we've had Australian growth GDP numbers coming in ahead of expectations, 3.5% year on year, above the 3.2% expected. So that was also a minor positive for markets. But what we're seeing, as I said, in European trading is fairly cautious trading, and that comes ahead of this crucial ECB meeting that's on Thursday, and I think that's going to continue to be the theme on these equity markets now until that meeting is announced at 12:45 tomorrow afternoon UK time. In terms of currencies, the dollar index currently is trading higher, and I will show you now. Hold on. Oh my God, sorry. There it is. Dollar index continues to move just slightly above this 80.4, showing gains once more against the major pairs, and it's building quite nicely, and that is certainly showing in the moves on these major pairs. Certainly the euro breaking down, sterling breaking down, also dollar yen pushing strongly above that 102 big figure level. So some of the big FX pairs certainly moving in dollar favour at the moment. The data we've got to look out for today is the services PMIs that comes out for Europe. Come out throughout the morning. UK is at 9:30 this morning. Forecast to come in at 58.2, just down slightly from the last month at 58.7. You got the US number at 3 o'clock this afternoon. The ISM data, that's at 55.5. Which would be a slight gain on the 55.2, but certainly the ISM Institute of Supply Management would be hoping to avoid the embarrassing revisions that it had to put out on Monday for the manufacturing data. But we'll wait and see what happens at 3 o'clock there. You've also got at 1:15. You've got the ADP number, which some people say is a bit of a lead indicator for non-farm payrolls on Friday, although it tends to, well, certainly last month, 220 it was last month, non-farms was 288, jumped significantly more than the ADP number, the non-farms last month. So whether it has an overall gauge or not, the numbers forecast coming at 210, so very slightly down on last month for the ADP. Okay, my chart of the day. That takes me to the DAX, and these equity markets, this is on the daily chart, these equity markets, having opened up strongly on Monday, have just been creeping lower ever since, and I think yesterday we saw a breach of the support that took it to a 6-day low. That yesterday's low was 9887, so that was a 6-day low on the DAX, and it just suggests that I think that we're still in coming over into correction mode. You've got these momentum indicators on the DAX that got to extended levels, certainly on the RSI, and have just begun to turn over again. Stochastics have already given a corrective sell signal, and I just think that this uptrend that we've been in for the last 6 weeks is gonna get tested. Also, you've still got these this gap open following on from that break above 98.10. So I just think that we're going to be coming back towards that in the next couple of days, maybe. And I think today, is going to end up being a bit of a slide day, as this caution takes over, because I think that Wall Street just has an air of losing upside momentum now, and I think a bit of profit taking could perfectly be possible on Wall Street, and that could drive a bit of correction into the afternoon for these markets in European trading. But I still think the DAX could be coming back towards this support. 97.75, 97.80 is around about where it comes in today. But certainly 98.10 is that breakout level that we saw, and that is yet to be tested on as a support. So I just think we're coming back down towards this trend line here. Let's show that slightly more detail. On the hourly chart, here's that uptrend again, being used on a consistent basis. You've got these moving averages all rising, so that's positive, and these momentum indicators in positive configuration, but they do look corrective, and I think that would ultimately drag that DAX back down towards that 98.10 mark. You'd probably say that you're seeing, if I zoom in slightly here, a sequence of lower highs now on the DAX. So you've got one from Monday at 99.60 as probably your initial resistance, below the 99.92 all-time high, which was just under the 10,000 psychological level as well. So that was interesting. But yeah, I just think that this is just got a corrective air about it. Certainly breaking that support yesterday at 98.98. Yesterday's move down to below that support just suggests that this move is rolling over, and I think we're coming back towards here. Anyway, I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.